Good afternoon, everyone. This is Trader Tim from eminimine.com. Today's Monday the 22nd. We're doing a market analysis slash trade recap. It's actually only midday putting together this video. I wanted to run through some trades setups here on the ES. First, we'll talk about a little bit bigger picture, and then we'll drill down to smaller ES time frame. So I wanted to start on the SPY today. We've got some volume that I wanted to highlight on. Notice how the move up corresponded with a decrease in volume. You can also see this on the ES chart, but the increase in volume here on the move sideways, and then you can see the channel that I have drawn. And from a daily perspective, we can move sideways towards the bottom of the channel, touch that channel, and then move higher. We don't necessarily have to make a big sell-off to sort of build up new buying support. And so, when we have, a bit of a hole like this, if we want to just draw it like that, where we've got, this emptiness where we haven't really traded in this area for a while, and the last time we did was sort of a series of gap ups. If we go back, if we pull this to the left, we can actually see that, yeah, there is some support further back. And so just because we have a hole between where we currently are and the bottom of this channel doesn't mean that we have to come down to it to go higher. And so knowing that on the daily chart, when we had the gap down this morning, the first thing I looked at is the breadth and the advanced decline line to determine, is there heavy selling volume and are a lot of stocks actually declining? And the answer this morning was no. I actually did have, I put on some puts on Friday, something that I don't usually do a lot of going into the weekend, but we had sort of kind of rallied up to what I was considering a 50% area, and we had broken the swing low back here just ever so slightly on some of the markets. So if we come over to like the Dow, more bullish, and then the Russell a little bit weaker, broke that swing low, and then the Nasdaq was also fairly weak and broke the swing low. I could have put the position on in the Qs just the same, but I happened to do it in the SPY, and either one would have been fine. Qs, SPY, those are usually the two that I use for putting on hedges. Just because there's lots of volume, there's lots of contracts traded, easy to put on. So, but when we opened this morning and I saw a breadth and advanced decline line at 1-to-1, I ended up closing the position at the open. I ended up just using the weekly options, which also not something I do a lot of, but it worked out for a short overnight essentially play. And then the other thing I wanted to talk about, because I've been getting more questions about option trading. There's basically two setups that I use to swing trade positions, and you could do this on the futures as well, but I find that options are a little bit easier to manage risk or trading the underlying stock. So with a pullback, getting long at the close of the candle, so at the close of the day, like on the 18th here in CRE, getting long at the close, putting on the long position, and then closing it out the next day or the day that we have the breakout at the close. So if I'm going to use options, I typically hold them very short term, and then I close them out on a strong up move, because if you just move sideways or move down, as we've talked about before, then the option prices can just deflate. And then the other setup I use, so that's the pullback setup. And then the other setup I use is the breakout, where you're buying, same kind of thing, buying at the close just before the breakout, and then holding the position through the breakout day. So like at the end of today, I'll close out this ANF. And this one was pretty small, pretty light volume in the options market, but um, it was a nice looking chart, so I went with that one. And bigger picture, nice strong uptrend, higher highs, higher lows, that kind of thing. So those concepts can easily be applied intraday, and that's why I do like to touch on some of my swing trade positions, even though we're mostly focusing on the ES. So let's turn over to the ES. I actually did not have any trades on Thursday and Friday. And on a day like today, where we open up in a pretty with a pretty big first candle or first couple of candles, when we end up going 30 minutes of trade, I like to mark the high and the low of that first 30 minutes to determine, well, are we going into a trend or are we just chopping around? And so I first look to the breadth and the advanced decline line. If they're near 1-to-1 or near 0 on the AD line, okay, that's a sign that we're just going to move sideways. And then I turn to the 30-minute candle and look at, okay, let me mark the high and the low like I have here. And if we move above it, okay, maybe I'll look for a fall back into the range. And if we move below the range, I'll look for a move back into the range. But if it's going to be a trending day, well, then you would expect the market to move above the trend or above the 30-minute range and then go higher and not come back into the range. So today was a pretty blah morning, even though we had the gap down and we kind of went gap and flat. We had a high tick early in the day, 7:55, I believe. Which one was it here? We had two. We had one at 8:12, one at 8. Yeah, it was the 8 o'clock one here, where we had a high tick that printed a high price. This little sell-off was not that enticing because the price action before it was so messy. So I actually did not end up taking that as a short. But when we moved higher about 10 minutes later, see how we move above the top of the first 30-minute range fairly convincingly, a good 3 points, and then we fall back down into it pretty harshly. That printed a high tick, and by drawing, it took a little while, but drawing that up essentially on the 5-minute chart, it looks something like this. That did set up in a short. We broke through the 61.8 just ever so slightly, 2 ticks, but it did set up in a short that lined up on the 512 with the 5-minute bigger short, and that had a pretty strong push down. That one, I would give it maybe a, B minus rating as far as quality of that kind of a short setup. Later in the day, we were only 10 minutes away from, or we were basically an hour 45, or an hour 15 rather, into the day. So if you just came out of today with not taking any trades and not having any losses, consider that a win because there really wasn't a whole lot to do. But let's go back to Wednesday of last week, which was the 17th, and just talk briefly about those two trades that I had. Actually, the same setup as far as a high tick of day. So let's get to that. We have 755, 820. So here we had a high tick. Let's see, okay, so we had a high tick at highs, and we sold off here. This one I took short, and I actually tightened my stop. Let me zoom in. When we broke below the swing low here, we had a pretty quick sell-off, and so I moved my stop down above the 16.8, which happened to be right at break even, and I was taken out. It went a couple of ticks against me there, so I didn't catch this leg of the sell-off, so I ended up with just break even on that short. But the next high tick at highs was a beautiful double top, and so when we sold off, like so, this distance here, the 50 to the 61, well within 2 points. So 39.15 was my entry, 17 was my stop. And so just entering it that 50%, that got a nice strong move down right away, and then just trailed my stop from there. So that was good for about 6 points I think I got, and then plus the 3 point first target. So, and that's per contract. So um, nice little high ticket highs fading that move, fading a move above the top of the first 30-minute range, which was, somewhere, maybe around, let's see here, let's get the exact. So the 17th, it was actually up at highs like that. So we touched the top of the first 30-minute range and then met with resistance, fell down. Touched it again, met with resistance, fell down. So clearly, if we highlight the top and bottom of the first 30-minute range, at least until right at the close, we were very range bound. So you don't want to be taking halfway backs in the middle of the range because you'll just get stopped out. It'd be stop out short, stop out long, stop out short, and then by the end of the day, there wasn't a pullback from low to high. The day kind of ended with just a little bit of a push higher. So going into today, and Wednesday is a lot like today so far, setting up. Going into today, look at the trend moving sideways. We could easily push higher and make it to Friday's close. And that's the next thing I just want to talk about briefly is pay attention to the unfilled gaps, like places where we have not traded since the prior day. If you look at Friday, we opened up, we moved higher, we filled the gap, and then then we reversed. So use those until they are filled, then you can get rid of them. We have an unfilled gap below us, 67.75 on ES. We came close twice now, but have not touched it. And then above us, we have Friday's close is really the last unfilled gap. I don't consider the 15th was President's Day, so that's kind of a null day over there. All right, and then the last thing I just wanted to touch briefly because it's a nice example of a trend and multiple trend lines is Bitcoin, and it's been in the news a lot. So when you have multiple trend lines where we have a shallow trend line, and then the trend line gets a little bit steeper, like this, connecting the lows, and then steeper still, connecting these lows. We can, again, move sideways to the trend line, or in Bitcoin's case, kind of move down quickly and then bounce. And so the S&P, we're seeing the market moving sideways towards the trend line, consolidating. And then on the flip side, we have Bitcoin that moved sharply down this morning and then has bounced off of that trend line support. So just worth noting the two ways that you can get to a trend line, and then essentially if you're looking to buy that support level, that level is the trend line. If the trend line breaks, then you can come to the next sort of shallower trend line and see if you can get a move down to there. Now, one thing that's interesting with Bitcoin in 2021, this rally versus 2017, you have a lot of big institutional money coming in. It's not just those mom and pops from down the street, talking about this new thing that's kind of abstract. You have big institutions. You also have big companies putting or adding some Bitcoin to their balance sheet. And so this makes it in some ways more sustainable because you have bigger money coming in that is looking to buy any dip that's out there, but it also does add some risk for the markets in general, because if these companies are adding Bitcoin to their balance sheet, well, if Bitcoin pulls back, it could pull the market down with it. Now, in Tesla's case, they have likely already doubled or made, they put in $1.5 billion. They probably are up already $1 billion on their investment. So even if the market pulls back, let's say we draw up the next retracement from lows to highs, market comes all the way down to a 44,000 or even comes down to 30,000, they're not hurting too bad. More than likely, we've got an extension high to high, and so this test here at 50,000 should likely see some decent support and move us higher. But it does certainly add a little bit of concern. You have, if you go back to, like the 2000 and the tech bubble, as far as you have all of these alternate coins out there. And if you think back to all of the different tech companies that were coming into the market, um, most of them did not survive. So I would expect most of these coins to go away. But what companies did survive? Your Amazons, your Microsofts, your Cisco's. There are a lot of companies from the dot-com era that are huge companies today. And so just because there is a bubble, it doesn't mean that those companies will all disappear. And it does not mean that all of the coins will disappear. So some lessons on trend lines here in Bitcoin and general support and resistance, and then also from a bigger picture perspective, there might be some market implications if these companies start adding Bitcoin to their balance sheet. But at the way things are going, I'm not overly concerned with a huge market crash just yet. A couple years from now, it could be a bit of a different story. But the other thing that I'll end on here, and it's interesting to note, is that there was not a housing crash coming off of the tech bubble. 2000, 2001, all the way to really 2000 and late 7, the housing market was very, very strong. And then 2008, 2009, we had the housing crash. So being diversified with real estate versus stocks versus cryptocurrency, always a good idea. So if you do have questions, drop them in the comments below. And then tomorrow morning, we'll be doing a live trading session. You can check that out over at eminimine.com/VIP. Thanks for watching and have a great week.